All right, we're watching market sell-off as fears surrounding coronavirus escalate. And joining us on the phone is Torsten Slok, Deutsche Bank Securities chief economist, going to help us break down what has been, and it's never happened before, this rapid a decline into correction and almost into a bear market, right?
That's right, Adam. And what's really unusual about this is the speed of this correction. If you go back and look at the history of when you have been at all-time highs, how many days did it take to get a 10% correction? In other words, how many days did it take to get from euphoria saying that things are going up and we are at the all-time highs and things are moving in the right direction, and then to get a 10% correction? This is what we've seen this week is the fastest episode, namely only 6 days, 6 trading sessions, and then we had the correction. It tells you how quick the turnaround in sentiment has been.
And what about the sentiment among consumers? Torsten, that's something we've talked so much about, that the consumer has held up and behaved so well during this more, tepid economic expansion. How quickly do we see the market sell-off and coronavirus worries translate into a slowdown in consumer spending?
Well, that's right, Julian. The frustrating thing about your question is that next week we get data, as you know all too well, about non-farm payrolls, meaning employment. And we also get data from ISM, but that data does not reflect what has happened this week. So the short answer is we have to wait and see. The issue, of course, is that the anecdotes that come in from a number of corporates and that you also cover so well on your show is, of course, telling you that maybe something more significant is happening. But from a quantification perspective, we really have very little, if anything, to hang our hats on at the moment. So in that sense, it's quite ironic that from a pure macroeconomic perspective, we feel more strongly that it's probably easier to predict what the Fed will do than what the GDP numbers will be doing.
Hey, Torsten, Brian Chung here. So on the Fed point, there's a pretty big divergence between what the market would like to see from the Fed, which is based on the March Fed funds futures contracts, 100% chance of at least 25 basis points, and what we've actually heard from Fed speakers, which is that they're not really willing to do anything right now. Do you see financial conditions tightening to the point where the Fed almost is forced to cut at this point, or do you think they still have some leeway to stay hold on pat?
So I think that the Fed and also the ECB have been grappling with this, just like us in markets, trying to figure out how do we assess the situation. And to Julie's good question, is this something that has real consequences? Does this something that mean that we will ultimately have, in the worst case, a global recession, or of course even just a U.S. recession alone? That would of course be very serious, and that would of course warrant some action here and now. But most of them, including Clarita here 2 days ago, basically said it's just too early. So the short answer to your question is markets may, as you know, sometimes get ahead of themselves, but it does look, given the situation and given still how the virus is spreading, it does look like now it's markets that are moving in the right direction and eventually will probably be dragging the Fed along.
Considering the lag in monetary policy and the way it acts, might the Fed instead reduce the balance sheet tapering that they were going to do, the balance sheet extension that they've done as a result of the repos? Could that be their way of easing monetary conditions without an actual rate cut?
Yeah, you're absolutely right. If you think about the nature of this shock, the nature of this shock is that basically there's a number of work weeks that get lost because people stay at home. Also, there are some supply chains that also get disrupted because things can't arrive on time. But those things are by definition supply chain and basically supply side problems. And the Fed can't really do much about disrupted supply chains. They can't really do much about basically people not coming to work. What they can do something about is if there is any immediate need for liquidity in financial markets. But I think the silver lining of what's been going on this week is that financial markets have actually been functioning quite well, including ETF markets. So from a very broad perspective, the Fed is just not the right tool to solve a coronavirus, but what they can do is some of the stresses that are coming as a result of what we're seeing this week, they can try to alleviate and dampen some of this. But still, the challenge is, exactly to your question, what needs to be done. And so far, in some sense, one way of interpreting their silence is to say, well, so far they haven't really come to the conclusion that anything is needed quite yet.
Torsten, just quickly, yes, there are a lot of unknowns here, but to what extent do you think it is a risk, a real risk, that we will see a more fundamental derailing of the global economy as a result of coronavirus that lasts the balance of the year, say?
That is a serious risk, and we are very worried about the downside risks. But what makes this situation so difficult is that there are actually also some upside risks, and I have no way of assigning probabilities to these. But if you think about it, we could have headlines about vaccines coming through faster. It could be that the market comes around to the view that this is quote-unquote just a special type of flu, but it is just a type of flu. And it could also be that the numbers in terms of infected individuals globally, if that starts, in particular outside China, if that starts the second derivative to flatten out and we see slower growth, it could also be that the market comes to the conclusion that it looks more contained.
Right.
But there's so many unknowns, including, of course, with how this is measured. Are there test kits in various places? Is this done the right way? That basically makes you worried that for now, we still worry more about the downside.
Yes, there's a lot to worry about. Torsten Slok, great to get some time with you, Deutsche Bank Securities Chief Economist.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.